before below where it opened at as far as the listing price is concerned. JSW Steel is down 2.5%. Coffee Day is down 5%. I'm just trying to look at stuff with the largest volumes for this time of the day. Soba, which of course out of the Bangalore-based players, real estate players, is the priciest. Soba is down about 2.5%. CESE is down about 4.5%. But these are still kind of early rates. Market breadth is not too bad. I mean, given the sentiment, 750 stocks are higher, and we got about 1,040 stocks which are lower at this point. So declines more than advances, but not by a lot, at least not right now. So we'll see how things pick up. KPIT Tech, and Sonia was talking about mid-cap tech, which continues to fire up. So tentative start. There is a sharp rebound already underway on the Nifty. Let's see if this is held on to. But we're down only 30 points now on the Nifty. So, you know, pulls both sides, from bulls and bears, and just kind of, I guess, trying to find the footing out there. Atul Suri is CEO at Marathon Trends-PMS. He's a market master of the day. Very apt and appropriate time in the markets to hear from Atul in terms of what he's making of things. Atul, thank you very much. We've seen a pullback in global markets here in India, out there in the US. What is your sense, Atul? Is this a bigger pullback, or do you think maybe we are 70-75% through with what we've seen in terms of the correction?
Prashant, I think last week has been a difficult week for market globally. If you see the genesis of the problem, these asset classes are overlapping really. And if you look at last week, I think one crucial thing that is really coming up is what is the Fed going to do? So you saw bond yields that crossed the previous high of 1.74, I think went to 1.894 or thereabouts. I'm talking about the US 10-year. And that is something, which brings about nervousness in the market. When bond yields go up, the market tends to move away from growth to value. So you have, these two very big pockets, and interest rates have a direct impact on them. The biggest representative of growth is tech. So, you not only saw a 7, 8, 9% kind of fall in the IT index in India, it was also the US. You see how the NASDAQ also took it on the chin. At the same time, you will find that in that scenario, value stocks tend to go up. And a representative of that is energy. So you will find that last week, whether it is the US, whether in India, you'll find that energy actually did well. So I feel that the US bond yields are a very, very big driver. And on the 26th, we've got, I think, a Fed meeting. And it's going to be very, very important because the market's going to really try to make some sense out of it. We're going to have 4 hikes, or is the first hike going to be 50 bips, as some people say it? So the bigger story, as I see it, and we can see it on our screen also in India, is the fight between growth and value. Growth has done well for a decade, more than a decade, but it has been accompanied by lower interest rates. So when there is a feeling that interest rates are tending to perk up, markets move a little away from growth towards value. And that is why you are seeing that the index is doing what it is, but there is very divergent sectorial performance, and a lot of the tech names, especially the newer, the platform plays, and all these guys are really, really off. And this damage, as I said, is not just in India but globally. And for India, I feel that as far as inflation goes, etc., I feel crude is very, very important. I mean, crude is very, very important globally because it has a multiplier effect. And today, this whole issue of crude is not just demand and supply, as I feel that it's very, very political. I feel what Russia is going to do to Ukraine, or what is the Saudi-US relationships. So I think there's a lot more politics. And honestly, these are much, much beyond our scope of understanding or subjects of expertise. So as far as I'm concerned, I really look at bond yields, and when they perk up, one can understand how things play out. These are kind of cyclical, counter-cyclical. These things keep happening, but I don't see any major change in trend. I still remain very optimistic on the markets.
Okay, well, by the way, just look at the market. What's clearly playing out is that the mid-cap side of the market, the move started on Friday. The mid-cap index is at low point of the morning, even though the Nifty and the Bank Nifty have recovered. A couple of stocks. ICICI Bank, by the way, in the first 6 minutes has done 400 crores of volume on the NSE cash markets. Tells you the kind of moves happening on that one. Atul, good morning. ICICI Bank clearly has been the one stock which has been one of the leaders of this market. Your thoughts looking at the charts here, and of course in comparison to the Bank Nifty, what would be your view?
Yeah, the bank nifty has been very, very slack last year, and I think the culprits have been the private sector banks, and in that also, which are more towards retail financing and things like that. The commercial facing banks, which is your ICICI and SBI, disclaimer, they are both part of my portfolio, so I have a vested interest. They have actually done very well. They have relatively stood out very well. So even in the banking space, the texture is changing. So it's something one is watching in the market as a whole. A lot of things that did well for 3, 4, 5 years, all the way up to 2020, seeming to fall out of favor. Sectorially, also look at pharma. If you see that pharma has did so well in COVID, even post-COVID for a few months, has been actually taking it pretty hard. They're taking a knock pretty hard. So this kind of shift that is happening, Anuj, in banking, as I said, the commercial lenders seem to be doing much, much better. And I think ICICI is a representation of that.
Okay, well, there is one trade that's playing out in favor of the bears this morning, and that is on many of these platform stocks. We saw it last week as well. Zomato is really the stock in focus. It's down 9% right now. It slipped below its listing price, I think on Friday itself. Listing price was 115 rupees, and that stock is just taking a knock. Many of these platform companies, of course, Paytm, everyone knows, has seen a downhill trend for the last many months. Even Nykaa, after that initial big boost, Nykaa also has been sort of losing ground a bit. Atul, there's not much of technical history to talk about with many of these newly listed companies, but be that as it may, what's your own assessment of how one should approach it? Because it's been a big roller coaster ride, for many of these names. Is it a strict avoid now, or would you still look at them?
No, I don't think it's a strict avoid. This is a sector that is a part of our life. The question is that at what stage, the first question is that what if you're already in it? Because, a lot of investors, they attracted immense interest in the IPOs, and even post that, the kind of volumes that there are. So definitely there is a lot of pain. And this is, not just in India, Sonia. This is happening globally. So, we may see, we may try to give a story to a stock A, B, C, X, Y, Z, but it's not. It's global. I mean, again, a case in point. I know everyone likes to take a pot shot at that ARC Innovation Fund and Kathy Wood's fund. I mean, she's a marquee investor, so I guess we all track her. But even her fund is off 50%. So, these platform companies which were not profitable, 50% off the top is pretty much a global trend that there is. But again, as I repeat, that these are companies, you cannot wish them away. You cannot wash them away. If you're holding well, you will have to endure pain. And at some point in time, there will be a base formation. But definitely, there's nothing telling you that the base formation has happened because, post-listing, they've all done their bit and they're all making new lows. So it's a case of catching a falling knife, and you really don't want to do that. As I said, at some stage, they will stabilize. The market will give you time, but you will have to wait for that. And again, as I repeat, that it's not going to be just in India, it will be global in nature. And one will have to wait for that. Of course, the time is not right now. And I think you can see the screen and you'll get a sense of that.
One clear takeaway, you can't correlate market by market move day on day or even week on week, US and India. But one clear takeaway is essentially what I think Atul was also referring to, which is this part of the market. In the NASDAQ also, the stuff which has fallen the most are so-called unprofitable companies, which will make money at some point in the future. They've got great prospects, but out in the future. And that is the part of the market which was trading very expensive, and that is essentially where valuations have crunched quite a bit. And I think, what's happening with maybe Zomato and maybe a bunch of other names perhaps also is something which ties in with what's happening out there in the US. Atul, for people who are watching, what would you recommend? What should one do both in their trading? What kind of discipline do they need to bring about now in their trading? Because, I mean, the texture of the market has changed, so you got to adapt. You can't trade the same way you were doing earlier. And second, where should you look for trades now in? I think energy is, of course, something you like. Go on.
Yeah. So, Prashant, what I feel is that after the run of a year and a half, 2 years, post 2020, I think the markets, and we have shared this view, we've come out with a research paper also, that the markets will consolidate. We've seen that historically, that after such big bull runs, the markets tend to go sideways. And these are markets, that the day you become very bullish on something, you start, last week we were talking of new lifetime highs. We were talking of 19,000 Nifty. And what has changed in 4-5 days? So the market, when we will all get bullish about something, some sector, some market piece or some whatever, I think the markets you have to be careful about. this really worked. If you just went and bought a 52-week high all of last 1.5 year, it really worked. But I think that now it's going to be a little tricky. And the moment you get very, very bearish on something, the market's going to surprise you on the upside. So when markets tend to be in a range or in a trading range, as I keep saying, that the market trend following did very well. I mean, a trader would understand the term. And right now it's going to be back to swing trading. Swing trading is nothing that at some point in time, everything that's beaten also will come up, and whatever is running away also at some point in time will correct. So I think there has to be a complete shift from the trading point of view. I think as an investor, as a fund, as we see it, we view it very differently. We think that ultimately our gospel truth is earnings. Wherever there are earnings, I guess we are in there. That is why probably we don't have any of these platform companies, etc. Is simply because they are not backed by earnings. And we are going through an earnings season. You'll have some sectors doing well, some stocks doing well. And as I said, it's not going to be a runaway market, but you will just have to keep aligning your portfolio to those stocks, those sectors, those themes which are backed by earning. Because what's going to happen in Ukraine, what's going to happen with Saudi, crude, bond deals, they are too complex.
Okay.
They are too complex. And then our market is a second level derivative. So what's going to be the impact on the market? I really, something that we can't take, global macro investors. At the end of the day, for us, what's going to be important, and I think that's my investment approach, is to first and foremost look for companies that are backed by earnings. And, I feel wherever there are earnings, the market will reward it. The trends will play out. You will have good days, good weeks, bad weeks. Someday it'll be growth, someday it'll be value, someday energy, someday IT. I mean, who the hell can move your portfolio north to south in 3 months?
Okay, Atul, we'll let you go on that note today. Thanks a lot for joining us.
Thank you.
Good conversation. By the way, we just want to make a couple of points. The broader market is getting a bit of a slam dunk. It started on Friday. Remember, it was last Wednesday or Thursday when the small cap index actually hit a fresh 52-week high. That happened. And now the small cap index in 3 days has fallen 7%. The mid cap index as we speak right now is down 1.7%. The advanced decline at right now is 1:4. The Nifty is now comfortably at the lowest point of the day, comfortably below the Friday low. 17,462 is what we have now on the Nifty, and the advanced decline is at about 1:4. So now this is as big a slam dunk as it can happen. I know a lot of stocks are leading it. Infosys, Wipro, Tech Mahindra, all the metal names. Tata Motors, which was one of the leaders of the market, all these stocks seeing a big decline.
Oh, absolutely. And Anuj, I mean, we were just having that discussion with Atul about these platform companies. What a fall, right? I mean, almost all of them, Nykaa, Zomato, Paytm, PB Fintech, all now trading well below their listing price. So I was just looking at it. Nykaa listed at what, 2,001 rupees. It's now at 1897 or so. Zomato is threatening to break 100 now. The listing was 115 rupees. Paytm, we all know, 1950 was the listing. Current price 938. So there's a story here, right?
Absolutely, absolutely. There's a story here, and a lot of the, when the investors who bought in after the listing, they get underwater. That's when the the problem starts with some of these companies. There's a lot of debate going on Zomato on whether it will go to its IPO price also or not. And we are not no one to guess that. But the price action today, Sonia, is looking quite interesting. Now, I just want to point out that the Nifty futures low right now, the Nifty futures low is 17,465. And the SGX Nifty low was 17,435. So just about 30 points. That's an important level. And by the way, just one winner that we must point out is Cipla. That was supposed to be actually Nimesh's standout brokerage report, where Credit Suisse has upgraded the stock and increased price target by a big number. That in a falling market is holding on up about 1.5%.
Okay, all right. Well, let's move.